Restaurant stocks have treaded water in recent months as investors voice concerns over the Delta variant's impact to consumer mobility. But our next guest says he is pushing all his chips onto the board with restaurant stocks. Coming out with a host of upgrades this morning, Jefferies restaurant analyst Andy Barish joins us now for our call of the day. Andy, really good piece of research here. This line, among many, caught my attention. You say it's the best environment for casual dining since the exit of the Great Recession. Make your case.
Yeah, thanks for having me on, first of all, guys. Nice to see you. Yeah, it's really the damage done, unfortunately, to a lot of independents in the sector during the past 18 months of the pandemic. It's caused a huge amount of capacity reset. So coming out of it, the large chain restaurants, which, as you mentioned, we upgraded many of this morning, are very well positioned to take incremental market share in the form of better same-store sales growth, including traffic growth, as well as potentially accelerating their unit growth as well, which, both of which we think will be rewarded with higher valuations and higher stock prices.
One of the names I believe you upgraded, Andy, was Cheesecake Factory. And if I read your report right, you recently had a non-deal roadshow with that executive team. What did they tell you? And will they be bringing back a dividend anytime soon?
Yeah, good question. Yes, we did have a chance to speak with them and investors. And really the big concerns in the industry of late, beyond Delta, obviously, have been the inflation concerns that we're all talking about and seeing in the headlines around commodities and labor. And really what Cheesecake management reemphasized was that they have the pricing power and the use of some other technology and efficiencies to offset some of the near-term inflation and continue to return profitability back to pre-COVID levels. And I think that's really the theme we're going to continue to see for a lot of the casual diners. In terms of returning cash to shareholders, I didn't talk a ton about it in the upgrade report this morning, but I think that will be another layer of positivity for these stocks in that they will generate free cash flow again in a fairly significant way, like Cheesecake Factory. And I think as they get into 2022 and put some of the bank credit amendments behind them, they will be returning cash to shareholders in the form of dividend and probably stock repurchase in a lot of cases as well.
Hey, Andy, it's Julie here. Well, Saz kind of zoomed in. I'm going to zoom back out for a second and ask more about Delta and how you're thinking about Delta and its effect on the restaurant industry here, and whether you think it's just a matter of sort of a little bit of a delay in a recovery for some of these names.
Yeah. Hi, Julie. To be honest with you, I think the market and many thought it was going to be worse than what we're seeing in our data. We have some proprietary foot traffic data. We also get weekly same-store sales data on the industry, and it's been surprisingly quite resilient. There's been some ups and downs, but generally the trend is bottoming out to picking up. I think in some of the hot spots as Delta moves around, unfortunately, you do get issues with team members in restaurants, which, maybe impact sales because obviously then you have to contact trace and, lose a bunch of people for a week or two. And that's not easy in a tough labor environment. But generally, the consumer demand has been quite good. The comparisons get easier as we move into the holidays because of last year, unfortunately, there was the wave of COVID that definitely impacted the holiday season. And we're projecting a very strong holiday season for the restaurant industry this year.
Andy, you mentioned the tough labor market, which we have talked about an awful lot. Is that a problem for this industry, or is it actually sort of a hidden benefit in some ways because their costs are lower? But on the other hand, do you have a lot of angry customers if there's not enough people working?
Yeah, I'm glad you asked that question. And yeah, I really don't understand the angry customer, thing. People are working hard and, in a tough environment, but unfortunately it does happen in restaurants as well as airplanes and other crazy stuff, as we all know, unfortunately. But what I think's going on in the labor environment, yes, it's tight. It's really tough. But what the large chain restaurants tend to have is a really good culture that provides excellent training and a pathway for growth. So I think the larger restaurants are really in an advantageous position to use those special factors in their human capital proposition, if you will, to continue to attract talent and provide a runway for growth for that talent, so someone can theoretically have a career in the restaurant industry. So I do think the bigger companies, with great culture, the ability to pay better, the ability to have better benefits, are in an advantageous position. No, not everybody is as staffed up as they like, but at this point, it's really, not causing any major issues. And the industry, just so people know, the industry's been seeing mid-single-digit wage inflation for 5+ years now. So this is nothing new for restaurants.
Andy, back to some of your picks. Red Robin. Now, we talked to CEO Paul Murphy recently. He told us they are rolling out Donato's Pizza inside their restaurants. How big of an initiative is that for the company? Is it going to move their sales and profits?
Yeah, it sounds like the early test results have been very good and very incremental. Obviously, it meets the need of the off-premise consumer as well as an addition to the menu. It doesn't sound like that big a capital cost, and I don't have the rollout numbers off the top of my head, but I've known Paul Murphy for a long time, and I think they're going to execute against the plan. And Donato's is just one of several areas that they're really focusing on to improve the Red Robin experience and broaden the customer base and frequency. And he is a very, very good turnaround CEO, and I think we'll see the successes over the coming quarters and years.
And lastly, Dave & Buster's, the CEO abruptly retiring this week. Now you have Kevin Sheehan in there. I remember him when he used to run Norwegian Cruise Line, so an interesting choice to take over there. How will his leadership impact the stock?
Yeah, well, first of all, I've got to give Brian Jenkins, the CEO and former CFO, a lot of credit for the incredible heavy lifting that had to go on through the pandemic. As you can imagine, the Dave & Buster's business model with, the high touch games and bars is, probably one of the most impacted businesses, but their recovery has been remarkably strong on the sales line, just showing that the consumer wants to go out and have fun experiences. Their margin performance has been nothing but breathtaking. And I think Brian's, really put the initiatives in place that can continue to drive the business going forward. Kevin is the chair of the board. This will be a temporary position as the interim CEO, as they've already begun the search, for a permanent CEO, which, hopefully will be in place over the coming months to continue to re-energize the brand, which I think is heading back in a really positive direction right now.
All right, we'll leave it there. Jefferies restaurant analyst Andy Barish joining us for our call of the day. Really good research here. Have a great weekend.